All right, what's up, Tycoon? Super excited for today's video. We're going to be looking at Sofi before earnings, all right, and giving you some just some data. Okay, we're going to go over some data on the chart, and we're going to take a look at what it did on its last earnings, all right, and we're going to see if it has that same pattern. Okay, repeats that same pattern. This has been a crazy earning season where lots of stocks are just blasting off, even on misses on earnings. Okay, just because the way that the market analysts, right, and the market makers are reading it, they're saying that a lot of the pain may be done and earnings wasn't as bad as they thought it was going to be. Okay. Take a look at SoFi's last earnings right here. All right. They actually, their earnings was expected -14 and they came out at -14. Okay. And if we look here, all right, it went on an 11-day 67% rally. All right. Now it definitely gave up a lot of that rally shortly after. Okay. Because the hype off of earnings, right, isn't always going to last forever. Okay. So if we look, it had a very red day the day of earnings. Today, it's consolidating a little bit. We're really chilling in between the 50% and the 38.2 level on the Fibonacci's. Okay. On our Fibonacci retracements, this is basically a neutral area. Okay. We're below the 50%. But you can see here that we've tested it a few times as resistance. The more times you test something as resistance, the weaker it gets. Okay. So we've really only tested about one, two, three, a fourth time today. If we retest it, there's a possibility that we may break that trend line, okay, and proceed to head upwards. All right. One reason that we may head upwards. All right. We have a couple bullish indicators. All right. And then I'll talk about, some bearish things you may want to watch out for. But if you look at these ovals here, this is a pattern known as lower lows. SoFi, if we look at our relative strength index right here, okay, the RSI, look at what that's actually been doing. It's going up. It's in an uptrend. So at each one of these levels, we bounced on our uptrend on the RSI. Okay, so this is what's known as bullish divergence, and it's something that you can spot once you start to practice and start to learn what you're doing. Right. I do have a tutorial on how to spot bullish and bearish divergences throughout the market. It works really good for forex, crypto, and stocks. Everything. So, if you want to check that out, go ahead and do that. Exactly trades, RSI strategy, or you can type in divergence strategy, whatever. We're going to move on. Okay. And now that we highlighted that, we'll just go ahead and look. We've been bouncing off of this trend line very nicely. Okay. So, if you're not in a bullish position on SoFi and you're waiting like when the next opportunity for an entry might be, okay, you might want to wait for us to come back down closer towards this level on the RSI, right? And then it skews your risk to reward ratio greatly in your favor. All right. So what it's going to do is essentially you can enter close along this trend line, and if we break the trend line and instead of bouncing up we bounce down, you can cut it very quickly, right? You can say, oh, okay, all right, well, we're not holding it, we're trading, right? And you can hold it to whatever you deem on the RSI, maybe 36, maybe 35, and cut it there. Or you're going to get the nice bounce and possible, extended rally over the next couple of days for a swing trade, or if you just want to catch it on the bounce for a day trade or a scalp or anything like that. It's a good opportunity there. All right, so if you're waiting and you don't want to play earnings, because earnings is going to come out after the bell today, and that's when tomorrow we may see it start the rally. Okay, we're not going to see it, I don't think, take off today. Nancy Pelosi is over there in Taiwan. That provides a little bit of volatility in the market, okay, bringing the VIX up, which is the volatility index. It's something that I track every single day, and I definitely recommend y'all start tracking and really learning how to process and just understand volatility in the market and what it truly means. So, if you want to do that, I got a video I'll be dropping later today on the VIX, the volatility index. I'll be giving an intraday update just so you guys can take a look. All right. Another bullish kind of a case for us, we have our two gaps up to the top here. All right. We have a gap up to 847 and a gap up to about 908. All right. So, not saying that these gaps are 100% guaranteed to fill, but let's take a look. All right. Let's duplicate the pattern from the last earnings reaction. Okay. And let's put it on today. All right. And look where it takes us. It takes us up above both of these gaps. All right. So This is just if the pattern repeats itself, you can watch out for it, right? We have some very valid levels here for you to put on as your stop loss or your position to reevaluate, right? The first one being 625. Okay. There's a possibility we could break 625, but every time we have, if you notice on the daily candles here, they're all wicks. Okay. We'll zoom in a little bit more so it's clearer for you. All right. And you can truly see the price action a little bit better. But these are what's known as wicks. These are not too important, right? They paint a very good picture. But what we're seeing is we're opening at the line, we're wicking down below it, but it's not staying there, coming up. We're opening above the 625 support level, wicking down below, but it's not staying below there, right? Opening above again here, wicking down below, opening above here, wicking down below. Today we open above and come closer towards this 6.6 resistance level. All right, so 625 and 583 are going to be my two main support levels, where if you wanted to have some risk management, these are some areas where depending on your own risk tolerance and risk to reward ratio, right, what you're trying to play, whether it's options or just stock prices alone, these are areas where I would have some stop losses. Okay. Now, the thing is, you don't want to miss out just because it dips a little bit, right? Like, let's say we come down here, okay, and we test this support level, right? And it just wicks below and it doesn't reverse, right? And then we find support there. And this is where we start our 11-day rally, right? Even if we do that, look exactly where it takes us up. Okay. So, it's not me just like making all this stuff up, right? This is where the gaps are. Okay. We looked on the chart here. There's a gap in between this candlestick and this candlestick, and a gap between this candlestick and this candlestick. All right. Those are two small daily gaps. Right. These fill 90 to 95% of the time historically in the market. Right. So these are something also that I'm tracking pretty much every single day. Right. I'm paying attention to what stocks have gaps to the upside, what stocks have gaps to the downside. I have a video on that. You can look up exactly trades gaps, okay, and just type that in, and it'll really just show you guys some actual proof that this is that these gaps actually fill. Right now, the main question is, when are these going to fill? Right, these are gaps to the upside, so these are going to fill in a bull market cycle, right, in a bullish cycle. All right. Not necessarily that the S&P or the entire stock market has to be in a complete bull market, but you get what I'm saying, right? You have to be in a bullish cycle. You're going to fill bullish gaps to the upside in a bullish cycle and gaps to the downside in a bearish cycle. All right. So you have to think, if we get that same reaction, right? Last time we had a very nice rally. Okay. If we were to repeat that pattern, all right, even if we dip down to our 583 support level before rallying, okay, it still could potentially take us up to fill these gaps. All right. Now, if you want to start taking profit along the way, right, and you don't want to be a long swing trader and you're not trying to hold for this extended move, because again, this is a 55% move. If you're trading options, it's much easier to get 50 to 100% on your trades, especially around earnings time, okay, because the implied volatility is going to be really high. And if the stock is able to outperform and go above the implied volatility, the expected move, then that's when really you'll start to see some big profits or some big losses on your options contracts. All right. That's the downside. If you're wrong on your options contract, it can easily go down 20, 30, 40, 50%. If you're getting a weekly contract, you can lose all of it, right? It could go to completely to zero. Okay. So there's lots of risks involved with trading. I just wanted to break down the chart and just show you what happened last time with SoFi. And we look at all of the stocks currently that have been reporting earnings, Amazon, Google, Apple, everybody, their earning isn't phenomenal. But what's happening is the market is like, okay, it's not as bad as we thought, right? So maybe if SoFi's earnings aren't as bad as the market thought, and it wants to keep this pattern of pumping stocks, that they like the earnings because they're not as bad as they thought, right? Pinterest today took off, missed on earnings, and that thing is performing very well right now. So, okay, so appreciate you all watching. Don't forget to like, comment, subscribe, and let me know if you found anything useful in this video, some strategies, things like that, anything you have questions on. Be happy to help you all out. Okay. And most likely I do have a video covering it, and if I don't, then I will I'll go ahead and reply with a video kind of explaining my answer to your question. Okay.